It's been a little while since we've done a volatility indicator, but here we are. We received a great suggestion from one of our community members, Teresa G. of California. She suggested this week's profile and even included the file to save us time. So hats off to Teresa. Thank you. The man of the hour is none other than Mark Chaikin. Some of you may have heard of him. He's been in the mix for a long time, since the 60s. We're looking at his indicator called the Chaikin Volatility. It's simple to use and is a below chart, zero cross, volatility indicator. Now, if you're thinking, oh, a zero cross, like below zero for a short, above zero for a long, and below zero for a short kind of zero cross? No, not like this. We're only interested in trades when our volume indicator is above zero, once everything else confirms either a long or short trade condition. If it's below zero, then keep looking. One last note. Remember that in a continuation trade, you do not need to validate volume, only in the initial trade of a particular direction. We'll be looking at something a little different this week. The Singapore dollar against the Japanese yen. So, two Asian currencies. I don't think we've done this one yet, so let's see what we can see. We're also going to add something extra to our charts this week to better demonstrate how a volatility indicator actually works. In addition to the baseline, an exit indicator will be added, specifically the chandelier exit indicator on its default settings. And finally, we're going to be making a few more editorial comments in this session than we normally do to better explain things. It does lengthen the analysis, but trust us, it will help further your education. Alrighty, we'll pick it up here. At present, the trend has decidedly been in a steady uptrend, and our baseline's last signal indicated a long trade about a week ago. The Chaikin is below zero, so we're not quite ready to get in. Let's move forward in time and see what happens. Okay, so now volume popped up and we've got a strong bear candle. Does that mean we go short? No. Follow the signals. Granted, you'd be making a decision with additional components of your algorithm, but let's just roll with what we see. Let's stop for a moment and ask the question. Chaikin has dipped and closed below the zero line. Is this an exit based on insufficient volume in the market? No. We never exit any trades based on volume indicators. Remember, a volume indicator is not an exit indicator. Let's resume the video and see how things progress by watching our exit indicator. Now we've got our exit indicator printing a signal, a solid trade in an existing trend. Who says you have to wait until price reverses and a new trend begins? Coincidentally, we've got a fresh short signal from our baseline, however. Chaikin hasn't given us the go signal yet, so we'll hold for the moment. Now we've got a solid entry signal based on our volatility. Let's see how this new short trade does. Okay, we've got an interesting situation here. We just got an exit signal. Does that mean we need to exit even though we just got in on a strong short momentum? If you're following your rules, then absolutely. So that trade would have been a loss. Alrighty, we're still short according to our baseline, and we've got plenty of volatility. If your confirmation indicators are in agreement with your baseline, then it's a new short continuation trade. Let's see what happens now. And nope, that would have been another loser. Yes, I know it can suck, but look at what we've got. If we approximate the upper and lower price zones, we can box in an area we call a ranging market. We've talked about this before. No matter what you do, they're tough to trade as we're trend traders. If you get caught in a range, stick to your rules because you never know when it'll break out. Let's continue with the assumption that we've got a long signal as indicated by our baseline, but no entry yet because Chaikin hasn't given us the green signal light yet. Yes, I know price was moving up, but again, stick to the rules. Trust us. Rules keep you safer and risk becomes more tolerable. Now that Chaikin has agreed with the trend, let's see what happens. Now, that was a low-risk, easy-breezy trade. We even had a killer exit. Remember, we're looking for the low-hanging fruit when trading. Don't force it. Let it come to you. Now a short. That was a loser. It happens, right? Let's follow it with a long signal from our baseline and Chaikin. That would have worked nicely. Smooth right up, Now we've got a short signal with a lot of gusto. Notice the baseline and Chaikin indicators. That was not fun. A loser there. We have a long signal from our baseline, but we'll need to wait until Chaikin agrees. Unfortunately, there was not enough volatility in that long move according to Chaikin to get in. It's fine. You probably would have been looking at least 35 other things. Okay, let's try again. The baseline is giving us a signal and Chaikin agrees. Even though the chandelier exit signal is still red, it's an exit indicator and not a confirmation indicator. A nice run there. We'll take it. A quick exit as well. And we've got an immediate short trade. With that start, let's see if the momentum continues. Great run there. Lots of profit on that one before the exit signal popped up. This is a great example of why a volume or volatility indicator needs to be part of your algorithm. Let's zoom in on this latest move to break it down. Here, we see price closed above the baseline. Assuming your other indicators were in agreement, you could take this long. But Chaikin is telling you that sufficient volatility isn't there to drive the price up and it goes sideways. If it's close to the zero line, pull up the data table to verify its value. Even though your exit indicator says it's looking for an exit from a long trade, you'd be ignoring it. So what do you think? Yes, no, maybe? Until you sit down, buckle in, and get to work, you may never know. Put in the screen time, and you too can find and use indicators that might help you create a profit-generating algorithm of your own. By the way, this pair was in a long uphill climb with a few minor retracements for about a year. There would have been plenty of continuation trade opportunities. It's available in the library at no cost, so don't delay. Go download it, install it, and get crazy with the Cheese Whiz. The link is in the video's description. We felt a financial advice question headed our way, but you know we just can't offer any. It's just not something we do, and you really don't need it. Find that something special in yourself and learn to trade. It's not that difficult, and with all of our resources, you can do it. Our only goal is to make you a better trader.